Evening, everybody. It's 6:30, and it's Monday. It's the first day of the new quarter, October the 2nd. Okay, so we had a little bit of economic information this morning, none of which was really overwhelming one way or the other. And tomorrow is an exceptionally light day, with only the JOLTS number coming out first thing in the morning. I think that they actually come out at 10 o'clock, so the market will already be open. As far as today went, September ISM manufacturing PMI 49, consensus was 47.8. It was up from 47.6 in August, but this is an expansion contraction and it's below 50, and that continues to be contraction. Construction spending increased 0.5% month over month. That was exactly as expected, increasing 9 tenths from 7 tenths in July. Uh, Total private construction up 0.5% month over month, while total public um, construction increased 6 tenths month over month. On a year over year basis, it was up 7.4%. The takeaway is that there's some balanced strength between private and public construction spending, and construction spending in general is up year over year. Okay, so let's call a spade here. This market sucks. The reason that I say that, on a day where overnight the news started it up strongly, by pre-open this morning it was down strongly. It opened down and continued down, although NASDAQ was up actually most of the day. The Dow had been down about 200, finished down 74, so a nice rally there. Here's the problem. Number one, the volume was light. Lighter than Friday, which was lighter than Thursday, which was lighter than Wednesday. So we've gone from trading over 5 billion to trading just 4.5 billion today. And frankly, it was very unimpressive. 4-to-1 down advanced declines on the NYSE, 5-to-2 on the NASDAQ. So again, we're back to this uh, Magnificent Seven bullshit, uh, which is without question one of the most unhealthy situations we could possibly find ourselves in. It is always a signal of trouble to come as the market leadership gets more and more narrow. That's not a speculation. That's not an opinion. That's the way it has happened over and over and over again. Interest rates are, especially for the 10-year, at a 16-year high. The last time they were up here was 2007, and I'm sure that everybody remembers 2007, 2008, and what happened. Um, At one point today, not long before the close, actually, the advancing declining volume on the NYSE was 8-to-1 to the downside. So we had the 10-year up big, over 10 basis points. We had less action than that on the shorter term numbers, but the stocks that got hurt here today were utilities, down 5.6%. That's an index. That's an entire sector down almost 6% in a day. Energy was down, materials was down, real estate was down, financials were down, healthcare was down. So basically, the only thing that was up were those. I'm not even going to use the term again. Um, the 2 year settled 7 basis points higher over 5.11, 5.11 on the 2 year. And as I said, the 10 year jumped 11 basis points after hitting up 13 basis points at 470. It closed 468. This is a market that I have told you repeatedly. This is supply. This is what supply does to the market. We're going to continue to issue more and more and more of our debt. There will be a shortage of buyers. There will also be crowding out by the government trying to, you know, make good all of the bad paper that they've put out there up until now, all of the deficit spending, all of the, sugar high that continues. It is not over. I'm not saying that we're not having a year end rally. And I'm not saying that, the market's going to get cut in half. It could. I mean, that's not what I'm looking for, at least not yet. But if these jackasses in Washington do not get it under control and continue to spend like drunken sailors with absolutely no concern about what will happen to our economy, then it easily could happen. The treasuries are moving in this direction, as I said, because there's so much of it for sale. But the bottom line here is it continues to get more and more expensive because they're not doing anything about it. Oh, there's a problem? Well, let's throw $1 trillion at it. This is just not sustainable. We have major changes going through the lower end of the economy. Target high this year 181.70, low today 105 and three quarters, closed 106.70. That's down $3.87, or just over 3%. They have inventory problems, and they've already spent 2 full quarters taking promotional write downs on those. We're getting a move lower on the economic scale of where people will shop when they're abandoning Dollar General and Dollar Tree and Target to shop almost exclusively at Walmart. There's a problem. Okay. And by the way, all that crap about how great it was going to be because the IPO window was open. The IPO window was open for a nanosecond. And if you didn't get through it and get out of your position on the first day or two, you're now behind. Instacart, which traded what, $44 after coming at 30, after being 24 to 28 and then 28 to 30. Today closed in the 20s, 26 and change, down 3 and change. We have ARM Holdings high on the stock after coming at 51. The low was 55 and a half first day. The high the second day was 69. Today, $52.30, down another $1.22. So that one's gone from 70 to 50. actually 49.85, and is currently 52. KVYO, the marketing firm, pardon me. VO. Nope, got the symbol wrong. I'll have to look it up in the morning. Okay, two stocks that I just want to point out quickly. Excuse me. SPHR. I wrote about this last week several times. I wrote about it in the market letter. I wrote about it in Discord and in at least two of the videos last week. This is the spin-off of the huge Sphere that just opened Friday night. If you missed the stories on it, just go to the news and look up S as in Sam, P as in Peter, H as in Howard, R as in Robert. It'll tell you the whole story. The stock was split off from Madison Square Garden, and Madison Square Garden still owns a third of it. It is an unbelievable venue in Las Vegas. They are opening a dozen of them around the world. Excuse me. U2 opened a residency there Friday night to rave reviews. The stock, as I said, was around 37.16 actually. Traded as high as 43.59 today. Last 41.69, and that's up 453 or 12.2%. And one little one, FEMY. This is a biotech. It's a healthcare medical instrument and supply company. The range on it over the past 2.5 years or so was a high of 13.75 back in June of 2021, and it traded as low as 25 cents last week, closed 31 cents last week. This is a company that has been testing a new um, feminine product for birth control, getting very positive results. And the stock, as I said, a week ago was 31 cents. This morning was a high of $4.75. Has had a great week the last 5 trading days, closed today 4 up $1.02 or 34%. There was a little company that dealt with birth control back in the 1960s, one of the greatest stocks ever, performance wise. Syntex. They're the ones who brought you the pill. Um, and it disappeared. It was taken over by somebody, but medical devices have a habit of taking on a life of their own, no pun intended, seeing as it's birth control. But we'll have to see just what kind of acceptance it gets. It's been upgraded everywhere. The oil was down $2, nat gas down 9 cents, the gold was down another 19, silver down another dollar. Bitcoin got up as high as almost 29,000, closed 28,150, up 1,050. The dollar was up 79 cents, and the bonds were down 1.5. I will be back first thing in the morning.